If you paid the IRS a penalty, any kind of penalty, failure to file, failure to pay, accrued interest on underpayments, late payments, etc., or failure to deposit penalties between 2020 and the middle of 2023, there's a real chance the federal government owes you that money back, possibly with interest. And almost no one's talking about this, but here's the real problem. Even though you may be entitled to a refund, you're not going to get a check in the mail. The IRS is just not going to send you this money back. You actually have to ask for it. And here's the other important thing about this is that you have until July 10th of 2026 to do that. After that date, in most cases, the money's going to be gone. So even if a court eventually rules in your favor, even if the IRS later admits that it shouldn't have charged you in the first place, if you didn't file the right claim by July 10th of 2026, you're out. So if you've ever been hit with a late filing penalty or a failure to pay, anything that I just talked about right there, and the IRS, charged you any of these penalties or interest during the COVID years, stop what you're doing and pay attention to this video right now. All right, let's get started. Okay, so here's what we're going to be walking through and what happened, who this affects, and exactly what you need to do before July 10th to protect your rights to this refund. Because this is not something you want to slip by. You'll regret it later if you don't do what I'm about to explain. So here's what happened. Last year in November of 2025, the U.S. Court of Federal Claims handed down a decision. It's called the Kwong v. United States. And I'll put a link down below if you want to go read that case. But the important thing about this case, what the court ruling boiled down to was this. You see, when the federal government declares a disaster, the tax code automatically pushes filing and payment deadlines back for an extra length of time for the disaster plus 60 days. You've seen this before, right? Disaster postponements happen all the time. California's had them. Tennessee had it back in 2025 because of the floods that were there. So these are things that are common occurrence. But here's where it gets interesting with COVID. You see, COVID was declared a federal disaster on July 20th of 2020. And that declaration didn't get lifted until May 11th of 2023. So you add 60 days onto that, and that's going to land you on that July 10th, 2023 deadline, our 2026 deadline that I keep talking about. So under the court's ruling, all right, what does this mean? Okay, so what they said is that every filing deadline and every payment deadline that fell inside of that 3.5-year window wasn't actually a deadline. Literally, returns filed during that period were not late. So if you didn't file during that period, right, you were not late. Payments made during that period were not late. And the penalties and interest that the IRS charged during that time, well, under that court's logic, the IRS should have never assessed them in the first place. Now, of course, the IRS, they don't agree. They want your money. And it's expected that this case will be appealed. And it's going to probably take several years for this finally to resolve itself. But here's what I'm looking at. All right. There's a deadline running right now. And so let's assume that this doesn't work out in our favor as the taxpayers. Well, fine. Then we don't get the money back that we already paid. But if it does work out in our favor, say 2 or 3 years from now, then you're going to be entitled to a refund. Now, the problem is that you can't wait to figure out what's going on with the courts. You have to actually make that claim now. And if you don't make that claim by the deadline, you're going to lose your right to a refund permanently. All right, so who does this affect? Well, it affects what we've determined to be tens of millions of people. And it's not a small specialized group. It's individuals, it's small business owners, it's large corporations, it's estates, it's trusts. It's anyone who filed an income tax return or an employment tax return, a state or gift tax return, or even a late international information return during that 3.5-year window, and they got hit with a penalty. Listen, I always file on October 15th. Now, when I prepare my returns, you estimate what you owe in taxes, but I tell you what, I'm never 100% correct. And generally speaking, what occurs is that my CPA will tell me, Clint, you owe this in interest, okay, on the money, plus you have a penalty for not filing your taxes on time. So those funds I'm entitled to a refund of under this ruling. So if you want to get a sense of scale, right, on how many people this affects, because I know it affects me, in the fiscal year of 2023 alone, the IRS assessed over $14 million in tax penalties on individuals and another $18 million for failure to file penalties. That's a lot of money just for 1 year. So if you've been in business, if you've had W-2 income with your side hustle, maybe you work for Uber or something like that, and you've owned rental property, if you owed estimated taxes, then there's a real chance you got hit with something during this window and you might not even remember it. So let me show you exactly how this works, because the dates are where it's going to trip you up. All right, let me show you. Okay, so here's our disaster window. Okay, so what we're looking at here, we go from 1/20 of 2020. Okay, so that's when the federal disaster was declared. COVID was declared January 20th of 2020. Now, that declaration starts, okay, the disaster declaration started then, but where it ends was on May 11th, all right? So then it ran from that period of time right here all the way down until 5/11 of 2023. Okay, so there's the time period in which we're under disaster relief. Now, this is where it gets really interesting, okay, between those two periods. What you want to do now is you want to add 60 days onto this. So what that takes you out to, when you add 60 days onto this number right here, this takes you out to July 10th of 2023, okay? So let me just show you what I mean by a real world example. So let's say it's tax year 2022, okay? So your return is normally going to be due that year, April 18th of 2023. So here we have 4-18 of 2023. That's when your 2022 return would have been due, okay? But you finally file your return because you missed that deadline. You got filed an extension and you didn't file it until 8/23 of 2023. And assume that you owed $20,000, right, when you filed it. Your CPA said, hey, you're $20,000 short. So you pay the $20K. Now, when you pay that $20,000, the IRS said, hey, you filed late. So we have a late filing penalty, okay, a failure to pay penalty, and an interest payment on that. So let's assume all of that adds up to $4,000 additional dollars. Okay, so you write a check and you pay it. Now, in 2023, and then you move on with your life. That's what we all do. But here's what that case changes. You see, under the court's ruling, your 2022 return wasn't actually due in April. Your deadline was postponed until July 10th. So at the end of the disaster window, your August 30th filing was technically late under the old rules, but under the disaster postponement, the IRS had no business charging you penalties or that interest. That $4,000, you can file a refund claim to get it back. Now, here's how the calculations matters for your deadline. Okay, you generally have 3 years, and this is what's important why I keep talking about this deadline here. You have 3 years from when you filed your return, or 2 years from when you paid the tax, whichever one gives you more time. So under the court's ruling, your return is treated as filed on July 10th of 2023. So your 3-year window closes on July 10th of 2026. So that means that these returns that we're talking about during this period, the deadline to file was July 10th of 2023. Not when you filed it in April 2022, or in my example, April of 2023. It's actually July 10th of 2023. So your 3-year window closes on July 10th of 2026. That's the deadline, and it's not that far away. That's why you have to take action now. So what does this claim process actually look like? So what you're going to have to do is you have to file IRS Form 843, and it's called the Claim for Refund and Request for Abatement. Now, I'm going to put a link to that form, okay, down below in the show notes. Okay, so just go down there in the show notes and you can find a link and you can download it. Now, when you do that, there's some things I want you to understand. First, if you've already paid the penalty, which we have, and you want the money back, you're filing a refund claim. Okay, so if the IRS assesses a penalty but you haven't paid it yet, then you're filing what's called an abatement request. So let's say that you still haven't paid taxes and the IRS is coming after you, you want an abatement. Okay, now This is the same form, it's just different language that you're going to use on the form. Second, and this is a critical part, okay, since this case is still moving through the legal system, you can either file a formal claim, which is referred to as a protective claim. And so what a protective claim means is, this is how you lock in your right now to a refund, meaning that until the courts ultimately come down one side or the other, hopefully on our side, if I file this form now, I've locked in my right for a refund, so then I can get that if it's favorable. All right, you don't need to know the exact dollar amount you're owed. You just have to tell the IRS in writing that you're preserving your rights. And if you don't do this and identify the years involved and reference the Kwong case, you're going to lose this. So what do I recommend that you do? You should be proactive, right, in filling out this form and getting it in, and make sure you write on there specifically protective refund claim pursuant to the Kwong case, right across the top of Form 843. Okay, so something else you should know. Okay, this can't be filed electronically. That's why I'm giving you the physical form to download. It has to be on paper and you have to mail it. So you have to send it certified mail with return receipt. And here's why. Because they may lose it, or they may state that they've lost it. And if you don't have proof that you sent it, then you will lose as well if this opinion turns out favorable for the taxpayer. All right, because if you've ever sent anything to the IRS before, they do not send you confirmation. So we don't want to run the risk that it gets lost in the mail. Now, the other thing that's important here, I'm talking about 3 years. So you need to file a separate Form 843 for each tax year and for each type of tax. So if you got penalties from 2020, 2021, and 2022, that's 3 separate forms. Do not bundle these. They have to be separate. You'll see that on the form. Now, here's a trap that most people fall into, okay? And our tax department has identified this many times. When filling out Form 843, it sounds simple. It's just 2 pages. But the IRS has very specific requirements about what makes a protective claim valid. You see, if your claim is too vague, if it just says, hey, I might be owed a refund someday, then the IRS is going to reject it and you're going to lose your right to that refund entirely. You see, your claim has to identify the specific issue, the specific tax year, and the specific penalties and interest amounts, and the legal reasoning behind why you think you're entitled to get this money back. And if you get any of these wrong, well, you're out of luck and they're not going to pay you. So one more warning, okay? Specifically, what I want you to be aware of is that you're probably going to start seeing a lot of promoters jumping around on social media saying, hey, we can help you get this money back, just pay us and we'll guarantee you a refund, and they want to charge you a percentage of funds maybe that they recover, or again, like I stated, pay or charge you upfront a percentage of what they're going to receive. If somebody's telling you that and selling you a guarantee, walk the other way, because there is no guarantee here, right? What I'm recommending you do, if you find that you paid a penalty during these tax years, is just file a protective claim to get it back. If everything works out in our favor, then we're going to get that money back. But you have to get that form in. You don't need to hire someone to file this form on your behalf. You can do it. So, what does this all come down to? July 10th, 2026 is that deadline, and after that date, in most cases, that door is going to close. So even if the Kwong decision is ultimately upheld 2 or 3 years from now, if you didn't file your form, like I keep telling you, by July 10th, the IRS is never going to pay you, and the court can't help you out either. So if you paid an IRS penalty between 2020 and the middle of 2023, even if you don't remember the exact amount, and even if you're not sure it applies to you, go pull your actual IRS transcript. You can get it from your IRS online account in about 5 minutes. Look for any penalties and interest entries on there with dates falling inside these windows, because if you see them, you have a potential claim. All right, guys, this is the exact issue that comes up all the time with taxpayers. They wonder why some people get money back from the IRS and they're not able to, and it's because most people don't have someone in their corner who's looking out for them. Our team here at Anderson Business Advisors, we help clients with their taxes every day, put more money back in your pocket. So I hope you take advantage of this right now. Give your protective claim. If you feel that, or you know that you paid taxes that year, any type of penalties and interest, get that money back now. Get that return sent in immediately. Go to the show notes, click on it right now.